Hello, this is a model response to the first assignment in financial acumen, and that is on personal financial planning. So you were playing the role of a financial consultant helping Sally determine why she was turned down on a loan. You were given a shoebox full of information and you were to make heads and tails out of it, specifically to determine her net worth, look at her paycheck in terms of net pay each period, and also look at her cash budget and see if you might shed some light on why she was denied the loan. The first step was to determine her net worth. That is comprised of assets minus liabilities equals her net worth. Her assets were just a couple of items. She had a bank account with both checking and savings, and she also had a 401k plan from work and also a used car. Those comprised her assets, which totaled $11,000. However, her liabilities were quite large. She had a school loan of $20,000 and she had credit card debt of $2,000 for MasterCard and $7,000 for Visa. So these comprised a total of $29,000. So her net worth was actually negative at $18,000. So it's not horrible or so unusual for a young professional to have negative work, especially in the age of mounting student debt. However, this is not the type of financial statement that would warrant a lender loaning her money to buy a car. So that's one of the reasons that she was unable to qualify for a car loan. The second requirement was to look at her paycheck and start with her gross and figure out where all the money went before she gets to her net pay. We start with gross pay of $5,000. Then we subtract out the withholding taxes for state and federal, and then look at other deductions for things like state disability and her elective coverages for insurance, in this case health and dental. When we subtract all those items out, we end up with $3,215 as her net pay in her recurring paycheck each month. Now notice that of these amounts, the withholding is an estimate based on what the tax tables indicate would be an estimated amount of taxes she would have to pay. That amount could be different from her actual tax when she files her tax return. But this is meant to have it not too high, not too low. If she finds that she consistently gets a tax refund, then she could consider lowering her withholdings such that she could get more money month by month, but then she'd be running a little closer come tax time. However, if she sees that she is constantly paying additional tax, which is always an unwelcome surprise at tax return time, she may need to increase her withholding so that she doesn't have that unhappy surprise when it comes to the end of the tax return and she has to write a check. So withholding is really your money as an employee, and you want to tune it such that there is not a high amount over or under come tax preparation time. The next section dealt with her monthly cash flow, starting with the take-home pay, which was $3,215, and then we'll subtract all the expenses, and we'll also add the small amount of interest that she receives. When we do this analysis of what she owes on a monthly basis, both for her personal discretionary items like entertainment and clothing and things of that sort, we see that she's negative. She repays her loan and she's negative $992.50. Now this includes the minimum payment under her Visa and MasterCard, but it does allow for her to pay her amount of loans for student loan on time along with the associated interest. But she's negative $900, which if she does nothing, she would have to go into her checking account to fund her negative monthly expenditure, which means she'll only last about 6 or 7 months before she runs out of cash. Not a very pretty picture. As mentioned, she didn't get her car loan partly because she has a negative net worth, but the other part we just saw that she doesn't have excess cash flow each month, so she cannot really afford any additional fixed obligations on a recurring basis. So she shouldn't take on another large monthly expenditure like a car payment. So the car company was probably doing her a favor by denying her credit. When we look at her 401k, we see that she's making small contributions, and it's something you'd like to take advantage of since the company put it there for the benefit of employees. Some companies may even match, making it even more advantageous for employees to take advantage of the program. In her case, even though it's a small amount, I would suggest that she stay with a $50 a month just to get in the habit of saving for her future. If she really gets in a desperate state, then she could consider making that go to zero and retaining that 50 as cash flow. But from a budgeting standpoint, it's probably wise for her to try to live within her means and set aside a little money each pay period just to start her savings toward her longer term financial needs. So I would suggest that it's a good program and that she should just keep her toe in the water and by only putting $50 a month for now. And as her income rises and she's able to better meet her obligations, she can then look at increasing that amount to a larger amount to provide more money for her future. So that's it for this first assessment on personal financial planning, and I look forward to looking at your responses.